Happy Friday, folks. It's 8:02 a.m. Chicago time on Friday, the 14th of July, 2023. This is episode number 2502. Thanks for being here. How was your week? How was trading this week? First full week of July. Um, I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's jump in here and take a look at what we've got in the convergent trading pre-market summary sheet. What is your opinion of this sheet? Is this useful for you to get? How many people are actually grabbing it from the Conv Trading Twitter handle? Is this a useful tool? It's under consideration for being discontinued. If you find that it's useful, just say why or yes or me or something. But it's a lot of effort putting this thing together, and we want to know if it's really hitting the mark. The risk exposure this morning is mostly mixed. The Dow is popping higher. JPM and WFC reported today. JP Morgan and Wells Fargo reported this morning, and we're seeing that kind of reflected in the Dow a lot more than anything else. Dow's price weighted. It's kind of in my opinion, kind of a convoluted index that the price of a stock can wag the entire index around rather than its market cap. So in any case, it is what it is, but we have mixed markets, mixed posture this morning. We're leaning a little bit bullish. We've pushed the overnight high in the S&P above yesterday's high. We're trading above yesterday's high, and so that's what we have. So this morning we got, as I said, we got United Health, we got Citigroup. Citigroup came out at $1.30 versus $1.33 versus $1.30. JPM, which is the big one, came out earlier at $4.37 versus $4 expected, and pretty decent forward guidance. Wells Fargo came out at $1.25 versus $1.15, and then United Health came in at $6.14 versus $6.01. So all positive there. Citigroup, I did say what Citigroup was, yes. So that's what's on deck now. This really kicks off the depth of our earnings season. So that's going to have an impact. So I'm going to be covering that more and more. Fed's Waller says the Fed will likely need 2 more 25 basis point hikes this year and favors raising rates at July meeting. I was looking at the FedWatch tool yesterday for something that's unrelated, and it was really interesting to see how the Fed funds rates are pricing these meetings. Look at this. We've got a 94% probability of a 25 basis point hike. Now, last time as we got closer, the Fed is going into its blackout period after today. I think it flipped. It was like 70%, 75% for a hike to 525 to 550 range, and then it flipped midweek based on I believe it was Bullard or somebody who made a comment, and it flipped it. Right now it's at 95% probability of a 25 basis point hike. So that goes with what Fed's Waller is saying here. But you look out to September, and it's an 82% probability that they'll stick with the 525, and that's what the market really thinks overall. The macro analysts are really seeing this as a hike and done July. So next week's FOMC is going to be very, very important. It's expected to be the last hike in the cycle, although the Fed and Fed speakers are really trying to keep us in check here. And then you go out to November, and it's still holding at 525 to 550. And then you have this probability coming in of more hikes, which is really interesting. It's kind of puzzling, actually. And then by December, we have the market saying mostly stick, but plus or minus 25 basis points after this hike that's likely to happen. So overall, the expectation, the market's really pricing in the expectation that the Fed is done. So this two more 25 basis point hikes, yeah, sure, but the July one, next week's one is very, very likely, but beyond there, it really is up in the air. Cooler CPI data, welcome, but need to see if it's sustained. Biden administration forgives $39 billion in student debt for more than 800,000 borrowers. Banks post strong earnings pre-market. Microsoft and Activision reportedly consider sale of some UK cloud gaming rights to get deal done. And then this morning, we also got, not mentioned here, but we got the export and import prices. Those came in soft as well. Import prices negative 0.2 versus negative 0.1, and export prices negative 0.9 versus negative 0.2. And then today, the big number, and it should be highlighted on the sheet here, is Michigan sentiment. Michigan sentiment. This is the prelim number. This is a mover. We're expecting 65.5. There's inflation expectations. There's an inflation expectations component there you have to listen for. 3.3 is the expectation. The 5-year inflation expectation is expected at 3.1%. Remember, CPI is at 3% currently. So this number here is likely to make it so that we open and we sit until it comes through. It has some really important implications going forward. So that's where we are. The auction condition, multi-distribution in the S&P, currently multi-distribution profile. It was a very much a balanced profile, and it popped higher on JP Morgan, I think, this morning. It popped a little bit higher and is kind of holding right at the right near the high of yesterday, right against our key 45.50 level. We have 161,000 contracts of volume, and the inventory is pretty much balanced. We've traded quite a bit below yesterday's low, but we're building yesterday's close, but we're building above yesterday's close. Now we're offsetting, and then the range is only 19 points, 18.75 points in the overnight session. Not so great. So it's been a snoozer. The point of control shifted up to 45. 40. That's a new high. That's a new high. So we're coming in with these stats here. Remember the rotations. I wonder how many of you here were at the AMA yesterday. We covered rotations quite a bit and explained why these numbers are really important for understanding what how to size things, what's normal, what's not. We're always, as traders, we're constantly looking to create sort of a boundary to detect what's normal and what's not. Harmonics is the harmonics, I think, is the most direct route for me to do that, most obvious route for me to do that. So we discussed this in yesterday's AMA. By the way, if you did not attend the AMA, I'm going to type in the URL here. I really suggest you go and have a look at it. There's a lot there. We talked about setups. We talked about process. We talked about psych. We talked about profiles, all kinds of stuff. Go and check that out and watch it. The URL's right there in live chat. Go to ct.pro/FT71AMA. We'll try to do these more often. And that's that. A quick review of yesterday. So that's this is the plan for yesterday. If you recall yesterday, during the trader bite, we were tail end of the trader bite, we were at 45.25.75, and we opened at 45.26. So we didn't depart much from where we were, and the expectation is responsive selling. Let me find a different color. so that I'm not mixing things up. What should we go with? Orange. Let's do orange. So we're opening here, and you can see there's a responsive expectation down into the 1516, and that's the over under. It doesn't mean it'll go down there. We're just expecting it to respond to as far as 1516, and then the expectation is for, if you recall from yesterday, 50. So we've got a gap higher, and we balanced out the prior day. We've got another gap higher. So really, we're expecting to go long. We're expecting to lean, gun to my head type of thing. We're expecting to lean long. We talked about this in Convergence chat room yesterday. Expected to lean long, even though it was really, really, really dull trading yesterday. But the expectation was for 50 on the upside. 50 here. The 50 station, which is where we are now, we're currently trading at 45.49.50. We're still stuck here. The 50 expected to kind of shut the door a little bit, and from here on above, it is very likely that higher time frames are going to be shy about lifting big from here is the expectation. So go to 50, pull back a little bit. We settled yesterday at 45.43.50. Okay, here's what actually happened. Let's go to it. Let's kill the fractals because they're noisy. Here's what actually happened. We opened at 26. Pull back. Oh, now the orange is not so cool. So let's go back to yellow. Open. Pull back. The extent of that pullback is 21.25. That's our IB. Very clean, clear IB, as we were discussing yesterday. Very clean IB. Very important that we observe that. Murky IB, right? And then it's just breaks out, comes back to mid. Mid was holding throughout the session here. A little bit of a slop there, a little bit short, a little bit of slop here. Held to the tick. And then off to the races we go. We have a nice little collision. That collision forms an opportunity, a potential opportunity for a pullback. Collisions are important. And then it pushes through. And where does it go? Remember, our target was 50, the mid-century figure right here, mid-century. So we're expecting it to go to 50, and it pushes through to 51.50, and then comes right off, and it ends up settling right here at 43.50. So pretty much scenario one done, pretty close. We didn't, we expected it to dig into the prior day's range, but I didn't expect, I wasn't saying that I expected to go to 15.16. That's just the over underline from the session before. So since then, European session right here. Then the Europeans come in right here, 2 o'clock Chicago time. They came in right here. And so the Asian session was a big old zipper, not much to do, very balanced. The European session opens. We have sideways, sideways, sideways. JP Morgan was, let me look at JP Morgan. JP Morgan was the first to report, or was it, I think it was United Health that was first to report. Then came BlackRock. Then came Wells Fargo. So 546 right in here. Oops, right in here. 546 is JPM. JPM. And WFC, which are the big ones, both positive, and we've been tracking upwards ever since. The scene of the crime here is around 45, 42 or so, 45, 42, 45, 41, and since then we've been pushing up, and you could see the markets running into collisions as it gets above or into 50. It runs into these collisions where the sellers, the offers are absorbing all lifting and causing the market to kind of pause. It's a grind. It's been a grind. If you look at the order flow chart, look at that. It's just grinding away. Just there's more grinding here than at a college party, but it's just kind of sitting sideways. Not much to do since the J.P. Morgan stuff. It's just a nice pop and then grind, 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 grind. So I'm expecting this morning to be a little wishy-washy. I'm just gonna take it easy. I'm not going to try to push any narrative this morning on you or on myself. We see that very large lots are sellers this morning, and large lots are buyers, with small lots sitting in the middle and the delta in the middle. So if you look at a cumulative delta here, look at that thing. It's just kind of sitting here, kind of stuck in the middle right here, and it's not doing all that much. So it's just kind of sitting sideways. So to me, despite what we see here, we have a market that's it's kind of separated from its VWAP. It's bullish-ish, but it could be responsive pretty quick. And if it responds, we're looking for it to drop back to 45, 42 relatively quickly on the reopen. The gap to settle trade is a high probability this morning. I'm expecting this thing to really find its way down to 43. The reason being, again, the 50, and we're seeing pretty good order flow collisions up here. So I'm expecting this thing to kind of turn over and push back into the prior settlement, and then from there, who knows? So what's the overall picture? The overall picture. Oh, by the way, we left some singles yesterday right here at 45.40. Keep an eye on that. So any rotation down, target 45.43, 45.40. Those are the two key areas. What have we done? Yesterday we opened above, tested into the prior day's range. You could see balance, and we finished pretty strong. So the uptrend, the one-time framing up, is very, very healthy still. So try not to fight the sell side. You start to get more confident in the sell side once we take away this low at 21.25 and end the one-time framing down. So in that case, we'd want to see it fall through, have a weak, fragile pushback into the 30, consolidate, and then start working its way down. Now it becomes safer to lean on structured short trades. Until that happens, you're looking for pullbacks for longs. I'm looking for pullbacks for longs, and then the short side presents better opportunity, of course, because we still have this gap underneath us and naked points of control and so there's a lot to clean up down here into the 45 handle. So, but until it does that, it's likely to be a slow grind. Keep an ear out for news. The Fed speakers have only today before the blackout period, and then next week, unfortunately, we come into the FOMC, and we don't have very much. I mean, we got China's growth, GDP growth on Sunday, industrial production on Sunday, and then on Monday, there's just nothing on the calendar, a bunch of different auctions. On Tuesday, we have inflation out of Canada, U.S. retail sales, and not much more. And then Wednesday, we have Great Britain inflation, building permits, balance, and yada, yada, and so on and so forth. So it's just a bit of a grindy week next week. So, just temper your expectations, enjoy the sun if you're in the northern hemisphere, get out, work out, walk, whatever. Don't sit at your desk. And if you do, make sure it's productive. So that's it. So this morning, what's the expectation? We open somewhere in here. The expectation is, the overnight high is right at 53.25. Probably tag that. Become responsive, come back to the 43, get to the 40, consolidate here for a little bit, and then just slump out for the rest of the session. So my only interests this morning are 43, this 43 settle, the 40 underneath it, and then potentially this 30 area if it continues lower. Anything, and if it dips in, if the scenario is that it dips in to the 40 and starts to come back out and push the overnight high or the prior day's high, then it's very likely to be a tough grind up from here. I don't expect it to move as easily or swiftly upwards. We've really pushed into areas that are a little bit more difficult to entice buyers to interact in my opinion, just looking at the bigger picture. Okay, so I'll leave you with that. I want to ask you again, look through the YouTube chat, grab that, go click on that URL, watch the AMA. It'll bring to light a lot of what I'm talking about here on a daily basis. I want to ask you to make sure that you are you're hitting the like button. If you're not subscribed to the channel, hit the subscribe button. It costs you nothing. And then enjoy yourself. Make sure you're waiting for setups. You're not out there fishing for setups. Okay. Crude. Oh, sorry. Yeah, crude. Real quick. Crude. Wow, what a runner. I really can't tell you anything about crude at the moment until it rotates back down. So crude above 76 to me is rich. And I don't have any indications of what to do with it. I'm looking for it to get below the 76, and in that case, I'll target the gap at 75, and I'm looking for a retest to 74 for it to continue higher. If it doesn't hold the 74, you're looking at it coming back to 72 again to the point of control. That's what crude looks like right now. But what a run. Take care.